Joining me now with more on all of that is the chairman of the CFTC, Michael Selig. Mr. Chairman, great to see you this morning. Thanks so much for being here.
Glad to be here.
And I know that you're seeking public comment on these new rules, which would establish a framework for contracts allowed on the prediction market. All right, let's say here. Polymarket says that the Knicks are trading at roughly 78 to 81% odds to win the championship. That's according to Polymarket. Kalshi also has the Knicks winning. What's your take on the framework here for prediction markets? What do you want to see happen here in terms of whether Americans can trade contracts on elections, games, economic data, and anything else, sir?
Well, this has been a long time coming. We've had prediction markets now since the 90s, and derivatives are really creative and innovative financial instruments. You can have a derivative on virtually any underlying asset, and the Commodity Exchange Act, our authorizing statute, contemplates that. So we are seeing a real influx of new contracts on sports, politics, and just about everything else. And unfortunately, under the Biden administration, the Commodity Futures Trading Commission, my agency, failed to issue any reasonable and rational rules of the road that would govern these contracts. They instead try to sue and drive these companies offshore. So we're doing just the opposite. We're setting clear rules and guidelines that make clear what sorts of sports products are suitable for trading in the United States, when exchanges certify those contracts with us, how we're going to evaluate what's in the public interest, which is what our statute requires. And we're going to make sure that contracts on war, terrorism, assassination, all the things that Congress and others are very concerned about seeing these offshore, we're going to make sure those aren't here in the United States.
Yeah, no, I think that's really great. Thank you for that, because so much movement was expected to go offshore. We spoke with the CEO of Robinhood, and he basically told us what an enormous business this has become, the prediction markets. Watch this.
Actually, we kicked off and launched the Prediction Markets Hub, which is multiple category prediction markets, in 2025, and it's been the fastest growing business in our history, ramping to hundreds of millions in annual revenue in less than 12 months. I think the value of prediction markets is in the ability to answer directly and clearly specific questions about all kinds of things, including economics. You know, we have prediction markets on inflation, and the markets will tell you exactly what the wisdom of the crowds is predicting for the year-over-year CPI in May, June, and July. Prediction markets are the best truth machines we have that can actually sift through all the information out there and give you what the current market view is saying about a specific event.
Mr. Chairman, you also want to make sure that perpetual futures trading doesn't move offshore, right? The CFTC approved the first regulated perpetual futures contract as well, following the rise of offshore exchange Hyperliquid, whose round-the-clock high-leverage markets showed strong demand there as well for trading across crypto, commodities, even stock-linked assets.
That's right, Maria. This product has been extraordinarily popular offshore. About 90% of trading volume in crypto is occurring offshore in these perpetual contracts, and there's no rules of the road governing these products offshore. Americans are using things like VPNs to access them, or using foreign brokers to get access to these really innovative products. We're setting clear rules of the road, and I'll be very clear on this point. We're not allowing for the sort of leverage that you see offshore. We're making sure that these products are safe for investors, and this has been the goal of the Trump administration. The United States leads in regulation, and that's why our financial markets are the best in the world. We've got to make sure that investors are protected.
Yeah, and they're the deepest, strongest markets in the world. No wonder everybody wants to come public in the U.S. I want to get your take on crypto and market structure, though, Mr. Chairman, because Congress is moving toward giving the CFTC a much larger role in terms of overseeing digital assets. What do you believe will be the biggest change investors and crypto companies should expect over the next year?
Certainty and clarity. That's why the bill's named Clarity, right? We want to make sure that the United States remains the crypto capital of the world. The president's been very clear on changing the way that we regulate in the United States. We're not regulating by enforcement and opaque rules. We're setting clear rules, but having that in statute is going to be critical. We want to cement that, make sure that the next administration, if it's a Democrat administration that's hostile to crypto like the last one, we want to make sure they can't tear apart all of our rules. We want the United States to lead on crypto, and this statute is going to help us do it.
Yeah, that's exactly right. And certainly President Trump wants America to be the crypto capital of the world. But look, the Senate is running out of time to get the Clarity Act passed before the August recess. There are only 16 legislative days left for the House before they take their August recess. Lawmakers working to eliminate any bad actor provisions and ethical issues in that bill. But there's more than just clarity here. The banks don't like what they see, right? I mean, I spoke with Jamie Dimon about this, and he says he's going to fight the Clarity Act because it basically allows crypto companies to pay rewards in some instances. And he says it's not fair because they're not FDIC insured. Here's what he told me just a couple of weeks ago. Watch this.
Are you happy with the way the Clarity Act is turning out?
No. No, because it allows them to effectively pay interest on deposits, stable coins or something like that, without the protection that they should have. And it doesn't do anything for AML BSA. It has almost no legal protections. So no, the banks will not accept it that way.
They won't
and the ABA, the small banks, the credit unions, it's not just the big guys. I'm not worried about stablecoin, but if it happened, I'm telling you, I would have nothing to do with it, and it would eventually blow up on its own. Okay, but that's my personal thing. But I do understand the concern of all the other banks. So,
well, the markup is coming. I mean, what are you going to do about it?
It is. We'll fight it. If we lose, we lose, and we'll live.
Yeah. Okay.
But it will be fought. This will not be. No one's going to bow down to this guy, okay, or that company. And he's the only one.
Yeah.
And he's spending hundreds of millions of dollars in Washington. This thing.
He said he's representing the whole industry.
Full of
What do you think, Mr. Chairman?
Well, this statute certainly will impose AML KYC requirements on the exchanges that are registered with the CFTC to act as digital commodity exchanges. So that piece, I think, is maybe a misreading of the statute. But of course, there are these entrenched interests fighting the bill. What's really important, and I think what this administration believes in, is competition and innovation. We believe in regulation. We want to set clear rules of the road and make sure that investors are protected, customers are protected, and that our markets are well functioning. But we also want to allow for this innovation. If we don't have it here, it's not going to go away. It will go to China. It will go to some foreign country, and we're just going to miss out on that. So America needs to lead. We need a clear statute that sets the rules, and that's going to really allow our markets to continue to evolve. As they've done, we started off trading under a buttonwood tree. We have trading pits. We have electronic markets, and now we've got blockchain-based markets, and we're really excited about that here in the U.S. We need to lead. We can't allow another country to take this opportunity away from us.
And look at this huge deal we're getting tomorrow with SpaceX, Mr. Chairman. I mean, you're talking about the largest IPO anybody has ever seen. What's your take on this deal?
Well, look, I think these opportunities now in the United States, we're seeing some of the biggest companies wanting to IPO, and that's all thanks to Chairman Atkins' leadership over at the SEC. He's done a terrific job making IPOs great again in the United States. He's worked to cut red tape, make sure that the rules and regulations are tailored for the way that companies want to come to market. He's making sure that, looking at things like the gun jumping rules, for example, which for so long have made it really complicated to do an IPO in the United States. And I think kind of tailoring the rules and regulations for these markets is going to allow them really to thrive in the United States, and will continue to lead.
Yeah, he said he wants to make IPOs great again. I had him on the show last week, and he's showing such incredible leadership, Mr. Chairman, as you are. And you've spoken about tokenization in the past. How close are we to a world where everything is tokenized? You've got stocks, bonds, other assets trading on blockchain rails.
We're already seeing brokers utilize tokenized collateral. So customers today can post collateral with their broker in tokenized format, whether it's a stable coin or another type of digital asset. And now the clearinghouses are also looking to accept tokenized collateral. So we're going to see tokens pass through from the customer, the investor, right to their broker, right to the exchange and clearinghouse. And that's going to really unlock, I think, tokenized markets. We're seeing interest, for example, from DTC. They're now now under a no-action position with the SEC able to tokenize shares, tokenize essentially the security interests that are traded in the markets. And so that's going to allow for real innovation. I think we're very close to seeing a lot of our markets on chain. It's really just a matter of getting the rules right and allowing that innovation to happen. Of course, there's a lot of entrenched interests and the kind of incumbents that are fighting some of this, but they can't fight it any longer. The innovation's coming, it's here, and we're going to make sure the rules are ready for it because, as the president said, the United States is the crypto capital of the world, and we can't have that without blockchain-based markets.
Absolutely. It is a new world. Wow. Mr. Chairman, it's great to talk with you this morning. Thank you.
Thank you.
All right, Michael Selig joining us this morning. Stay with us. We'll be right back.